In this video, we're going to talk about how to identify high probability setups using price action rules. So what is the structure telling me when I take a look at the chart? Well, we have uptrend working higher, we have channel that fits very well, and we're breaking the channel. So according to trendline rule, we expect new high to be tested, but as you can see, we're still below the supportive indicator, below the EMA, so I cannot go long just yet, because I don't know how many pushes lower there is going to be. I need to see the push above EMA, the bullish resumption, and I want to see some nice high probability setup. But the good thing is, downtrend played out with the break and the new extreme, bears depleted the momentum, and is a raw two-legged pullback. We have lowest low of the correction, first entry short that failed, and this is a high-low confirmation setup. We expect new high, and this is a great first high probability setup because we pushed above EMA, EMA keeps holding, and according to trendline rules, we need to get new extreme. By the time I get a failed second entry short, it is not full at the EMA, not even the tail is touching it, so I cannot take it. I need to see setups at the key entry point. It worked this time, but it's a little bit more aggressive. We created a break in new extreme, so how is this information important to me? Well, I have to pause looking to go long because uptrend played out with the break in new high. At the same time, I cannot pick a top, I cannot reverse the market, there is no reversal pattern, and this uptrend was quite significant, so I suspect we may have some area of indecision, area of development, so I'm just going to be patiently waiting and see what the prices will offer me. I cannot go short, I cannot go long. You can see we're not pattern traders. There is no uptrend in play for me to go long, so I'm just going to be patiently waiting like this. Now I can see EMA flattening, so I can predict possible consolidation because market cycle says after breaking new high, you can have consolidation before you're going to enter a brand new trending market. So I can see that I have two-legged pullback down, first leg down, break, second leg down, and now we have failed second entry short again, and this is a decent setup, but there is no real uptrend in play. The context is more neutral, and this failed second entry short is quite stacked, but this is a decent setup to take a chance. I took this trade with deeper limit order and I exited at break even because I didn't like the follow through. You can see this was a horrible bar, and you can see it is in order to make trading range, but more importantly, what is the bias? It's not bearish, it's not bullish, it is just sideways, but because you traded up into this, it makes sense to be expecting some additional leg higher. So possible entry right here, and now we have bounce off the lows of the trading range, which is basically one bounce, second bounce, third bounce. So this is a triple test. You're bouncing off of these lows, and this is decent triple test because according to range rules, you want to buy low, sell high. You're not really thinking about selling because you traded up into this. So it's a decent triple test high probability setup because the downtrend played out. There is no broader downtrend. Great setup. Market created push up, cannot go long and cannot go short. Market continues to go lower. Now we broke the support, and this move down looks like a one leg working lower. For this reason, I drew the channel a little bit wider because it is still in play. The support was supposed to indicate some bullish momentum, and because there is no bullish uptrend in play and I cannot find any wider channel, market may right now enter a brand new market cycle. Break a new high, depletion bullish, consolidation, and a bear downtrend may start. Now if you faded a breakout, it still worked for a scalp, but it is a little bit more aggressive. I cannot go short right into these lows. Market created a break and moved to a new extreme, but you can see we never truly broke above the EMA. It is too bearish. You can see empty room here, so we may truly reverse bearish. So I'm just going to be patiently waiting. And market continues to trade lower. So what I have to do, I have to look for some bigger pattern, and if I'm going to connect the swings at the top, you can see nice confirmations all the way here. So I'm just going to copy it. I'm going to find the trend channel line because as a trader, you want to train your mind to always look for these channels because that's the nature of price action. There's a reason to every single movement. So right now we establish a brand new market cycle, which is bearish. So I'm looking for high probability setups to sell at the key entry point. And now we have second entry short, which normally is a great high probability setup because we expect new low to be tested. But notice the short-term trend line is in play. I can draw it slightly tighter like this, but the break is really tiny, and when you're watching this real time, you really cannot bet safely on such a tiny break. So unfortunately, the trend line is still in play. So I want to see the lower high confirmation setup, and lower high didn't form. Market just created push to new extreme. You know, very tempting setup, but this move visually looks like a one leg working higher. So you know, we can't really market. There's a chance that the trend line is slightly tighter, but you cannot really draw those channels super tight because you want to really take into consideration the correction. But you can see this is how market moves. You wait for correction to the key entry point, Now another push to a new extreme, and now you have, notice what happened. You first of all have resistance established, and you have visual two-legged pullback like this. So because after breaking new low, we're not breaking above EMA, and we keep trending lower a little bit. This is where I took a look at this structure, and I asked myself, hold on, EMA keeps rejecting every single time. There is a case to be made for a slightly wider channel as a spike in a channel, and notice it still fits well. The structure is not distorted. You can see how perfectly it fits. And because these two legs are so broad and the resistance is coming into play, there's a big chance this secondary spike in a channel is going to get confirmed. And now you have another second entry short, but this time we are not fully at the EMA. Had we at least closer to the EMA, you can definitely consider, especially had this been a triple test, easy setup. But because you're selling a little bit lower, it is more aggressive, so I can mark it. It is not super textbook, but makes sense. The channel confirmed, broad two-legged pullback, key entry points held, and the market right now is still in bearish downtrend. Okay, we are closing outside of the channel, so what I have to do, respect the correction. Are you thinking about buying? You're not. This downtrend needs to get a break and a new extreme. So this is how you as a price action trader can predict where the market is going to go. You don't know where the market is going to go a week from now, but you can predict these short-term moves by understanding what the candles are telling you and navigating these channels. You can see market geometry is real. The channel fits perfectly. So we have a second entry long, but we know the trend is down, so we're not pattern traders. We're still thinking about a new extreme. Now we have a failed second entry long, which had it formed below EMA would have been a good setup, because remember, you want to see that confirmation, resumption of the bearish momentum that you're truly going to get new extreme, because this uptrend doesn't have new high. There can easily be second entry long to new extreme and then test new low. So because it is above EMA, you need that lower high confirmation. And notice now we have lower high confirmation of the failed second entry long. This would have been a great confirmation, but my signal bar is bullish. I cannot sell below bull bar. So unfortunately, I cannot take it. Almost we tested new extreme, not really. Now we have a second entry short, but it's so far down, so far from the EMA, especially since we are bouncing off the double bottom. You need setup closer to the EMA. There's a big gap. I cannot take this. So unfortunately, no setup here. You know, this is considered as failed breakout, but because it traded quite far from this congestion, we really need to see that extra second entry short here. But you can see congestion break higher, downtrend still needs to get new extreme. All these bulls are trapped. And notice the downtrend created a break and moved to a new extreme. And this line right here is what you already probably understand, that this is the low of the day key level. So you can definitely expect right now some buying pressure to step into the market, because the downtrend played out and you're bouncing at the low of the day. So you can definitely right now expect some buying pressure, but more importantly, downtrend played out. So we have to pause looking to sell. For this reason, you have a possible second entry short. As you can see, it didn't trigger below the bearish bar, but had it triggered, can you go long? Excuse me, can you go short? You cannot, because downtrend played out and you're bouncing off the low of the day. Remember, context matters. You cannot just take second entry pattern, okay? Individual pattern without a good context and good key entry point is not as important. You can be taking any second entry and it is not as helpful to you unless you understand the context and key entry point. So downtrend played out, support is holding. Actually, had there been some failed second entry short above EMA, you can consider. So now I'm going to expect some stronger reversal. Why not? Downtrend played out. But notice what is happening. EMA is not holding. Hold on. We are breaking lower strongly. So this is really interesting. Market is giving me information about the structure. And what is the information? New high was not tested. So this means that the uptrend was short term. And because the uptrend was tighter and it played out, and we are back below the EMA, this means there is probably a bigger downtrend being established. So I was looking at downtrend something like this, looking for a spike, broader spike in a channel. You still want to see some stronger pullback down to truly trust it, but this is the idea you're getting. Basically, it all comes down to reaction of this uptrend. EMA didn't hold and we retraced too far down. So there is no bullish reversal. This is correction part of the downtrend. So price action is telling you everything. Okay, we're trending lower. Right now, we have a new low. You have to reset the count. First entry short. Second entry short far from the EMA, of course, as you know, you cannot take. You have to remain patient. And now we have visual two-legged pullback, breaking new high. And this is what we call double trap, because it stopped all the early sellers selling the second entry short far from the EMA and all the early bulls buying the failed second entry short below the EMA. So this is a great double trap, and this is textbook high probability setup. You can see when double trap resembles broad two legs, this is exactly what you want to see. At the EMA, broad two leg pullback, there's some resistance here, great tier 1 signal bar, downtrend is new low, main channel is established, and what a great move. One sub like this, and you can catch massive runner. Now we have potential overshoot, so I'm going to respect the overshoot. Now, if there's a second entry short, can I take? Not really, because the uptrend is in play. It never triggered. There's no trigger, so you don't have to worry about this. But respect the overshoot, respect the uptrend. You expect right now the new high, so there's attempt to get a new high. Okay, bulls are trying, but we reverse below EMA. Hold on. We are attempting to create double top, and we are failing hard. And if you're going to zoom back, remember, this is a downtrend, okay? So you may not every single time get a new extreme. And because it is failing so hard, the channel can be just a little bit wider. And now we have lower high confirmation setup. And it is a great tier 1 signal bar. And at this point, once this lower high formed, it is obvious we're not going to get a new high. We're below EMA, downtrend is going to resume. And this is a great high probability setup. So you can see the correction phase will always end around the EMA or the trend line. And you're looking for breaks, at least attempts to test the new extreme. Now market keeps trending lower. I actually adjusted my channel at this point because we keep overshooting this, and you're not supposed to have an overshoot every single time. So I draw it much steeper like this, much longer, to really, you can see, take into consideration the structure. It is confirmed off of these lows. So let's right now focus on the price action. We're above EMA. Can I get a new extreme first? Of course, I'm not buying. Okay, we have a failed second entry long, but I don't really want to take it just yet. We can get a break in new high. It is a steep one. There is no bullish bar in between. You know, it feels like you're selling the breakout. You can see there is no breakout pullback. You're selling basically the breakout. There is no bullish bar in between. So we can't really just take it yet. And this is interesting because, you know, this is a massive bar. Now, it never allows you to get filled because, as you will see, there's a gap. But this is a visual breakout pullback pattern. Breakout, pullback. You're testing this breakout area. You're below EMA again. And because you're trading the downtrend, this is decent breakout pullback. But because the bar is quite big and your limit order would not have been filled, as you can see there's a gap. You know, it is hard to enter this real time. But you know, these are great breakout pullbacks, especially with such a great tier 1 signal bar. There's a strong rejection. You know, this is even a red bar, excuse me, red arrow. But unfortunately there is a gap, so unless you use stop order, which is way too big of a risk, you didn't get filled here because you need to decrease the risk with the limit order. I don't think we can take a short here, even though it worked. There is no second entry short. You were looking for a second entry short. Just a bunch of first entries, Unfortunately, only first entries. It's a shame, but nothing we can do. You know, as you can see, when the trend is strong, you have some variations of triple test, visual aspect of two-legged pullback. So more advanced trader can make a case for a lot of these setups when you understand what's going on. But you want to follow the rules, so you definitely want to make sure you're not picking setups willy-nilly. So uptrend is working higher, break, new high. Okay, we're part of the congestion, I cannot sell. I'm looking basically for something like this. This is similar patterns. I want to see broad breakout pullback. Okay, it looks like we may get a breakout pullback, but first of all, 4.5 points. Oh, that's not that big, but it never triggered. Okay, there is no break. Also, we didn't trigger above this bar, but there is no breakout pullback, so we don't have to worry about this. And market keeps continuing to work higher. So right now, I'm pausing looking to sell because, hold on, EMA keeps holding. We are trending higher. There's probably wider channel established because you can see, you may ask yourself, hold on, we expect new low. Yes, but first, respect the uptrend. As long as you're above EMA, you cannot sell. You need that push below EMA to confirm any bullish activity is negated and the sellers are going to test the new extreme. Right now, trend is bullish and this was a strong trend down. This correction, even though it seems big, it is inconsequential compared to the downtrend. So this may last quite a long time now. Okay, we have a second entry long, but the signal bar is absolutely horrible. As you can see, you cannot go long above this bar. Now, even though we traded down, this uptrend is quite strong. I'm looking for long setups because I can take advantage of the structure. Downtrend is in play, but we're breaking new extreme of the downtrend. So I'm thinking about high low above EMA. Can get a high low above EMA? We cannot. An uptrend created new extreme, so no high low above EMA. So uptrend played out, so I'm pausing, looking to go long. But I cannot sell because this was a significant push. Once again, you want to see the proven push down to understand that the sellers are back in the market and we keep trending higher. Okay, so you can see there's still some bullish momentum left. I don't see any setup here. You cannot go long, uptrend played out. You cannot go short. It is too bullish. Downtrend played out with the break. Move to a new extreme. And because we're back above EMA, EMA is flattening. I have to respect the consolidation for that EMA. Consistent price swings up and down. We are in the middle of the trend range. This uptrend played out. I cannot take any setup here. You know, this is interesting setup. It is a shame this is a third entry long and not technically second entry long. But you can see the buyers are stepping in the market right now around this price level because you're buying low, you're using the range rules, and the downtrend played out. So, you know, we're not reversing down. This is a consolidation pattern. But because it is not second entry long, and what if the lows are a little bit lower? You don't know this. Okay, more confirmations here. It fits better, but you just don't know this 100%. So for this reason, this support bounce is way more aggressive. Can we get a hollow? We cannot. Market created. Massive push. Break a new high. Okay, we have a lower high. Can I get a failed second entry? Long reversal pattern. We cannot. We have a break. Move to a new extreme. I was looking the whole time for a second entry short. Now, even after breaking a new low, there is some geometric formation of possible spike in a channel. The spike in a channel is not the best, but we never truly touched the EMA, so there's a big chance when we're gonna break above EMA, we're gonna test the push down again. I'm not talking about these setups because we're so far from the key entry point, so far from the EMA, we pretty much cannot take it. Okay, I'm gonna withdraw a short-term uptrend working higher. I cannot sell as long as we are above EMA. And now we have a new high, first entry long, second entry long there, which I didn't notice this real time, but there's a tiny first entry short here. New low, first entry short, second entry short. So this is double high probability setup. This is not only second entry short, but also felt second entry long, counting from the highs. And because it is a double high probability setup, you can consider there was about to be a nice lower high, but doji bar, you can't really take it. It worked anyways. Okay, market keeps right now going sideways, and now it's about to be too late. The market is about to close. So this is the overall structure for today. As you can see, a lot of price action, the bars got much bigger. So when you want to enter a setup and you're uncomfortable with the risk, you have to either scale down the number of contracts you're trading, or you can trade the micros, or you have to use deeper limit order to decrease the risk, but it cannot be too deep because otherwise you will not get filled. So what you have to do to combat this, you will simply increase your target profit, and in this way when you get the scalp will be more significant and it will equal out the higher risk that is caused by bigger bars. But I hope you had a good trading day. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.